before developing the two solutions that could help get out of the crisis. Let us ask ourselves the question of knowing if there is really a deflationary risk. In other words, which side of the coin, inflation or deflation, will win? Or will the coin simply stay on its edge, like the Japanese stagflation episode of the 90s? In the case of a deflationary scenario, what would be the stages of this infernal spiral? In this context, can we reasonably envisage a targeted nationalization of certain companies? We will study French strategy in this area for 10 years. What is the European Central Bank's strategy for dealing with this crisis? What are its means of action and its possible responses at the level of the states of the Eurozone? Finally, we will come to the two proposed solutions. The first solution, 100% money, and the second one, the intermediate currency of exchange. Deflation, or more simply says, the contraction of the massive currency in circulation. Let's study the pattern of the deflationary spiral. It all starts with massive indebtedness of states, private companies and households. Here is the graph of the evolution of French public debt in points of gross domestic product from 1996 to 2019. In 1996, this amounted to approximately 57%. In 2019, we are at 100 point of GDP for a total amount of the debt of 2,353 billion euros. After over-indebtedness of the state, let's analyze the situation of the various non-financial agents. In particular, the situation of households, blue curve, and the situation of private companies, black curve. Again, we can notice a significant increase in percentage of GDP of corporate debt, which goes from 73% in 2008 to about 89% in 2018. Household debt is no exception. It goes from 47% of GDP in 2008 to 59% of GDP in 2018. It is a fact, whether for the state, for private companies or for households. Indebtedness has increased very significantly over the past 10 years. The coronavirus health crisis caused a drop of a third of economic activity in France. As you can see from the graph, as of April 21, 2020, more than 9.6 million employees are on short-time work. Admittedly, this device is temporary. A large part of the employees will return to their jobs after confinement. But after this drop or absence of activity for almost 2 months, despite the postponement or possible exemptions of charges, how many small or medium-sized businesses will shut down? The decline or absence of turnover can lead small or medium-sized enterprises to bankruptcy, resulting in a wave of large layoffs. Another negative effect of this crisis is the anticipation of the stock markets on the decline in global economic activity. For fear of the deflationary scenario, or of a fall in the equity market, financiers are separating from their assets by opting for a very liquid position, predominantly in cash, to seize any future opportunity to buy back sold-out assets after the health crisis. Let's look at the evolution of the CAC 40. Since the 2000 years, the internet bubble led to a market drop of 65%. The financial crisis of 2007-2009 led to a fall of 59%. The coronavirus health crisis caused, it is true, in a very short time, a fall of 37% of the Paris index. However, the magnitude and severity of the current crisis, even if it is not yet banking, is out of all proportion to that of 2007-2009. This suggests that the fall of the stock markets is far from over, despite possible rebounds. Let us analyze the Business Climate Index. The Business Climate Index is an indicator of optimism or pessimism in the business community. There is a glaring correlation between this index and the development of industrial production. Let me explain. If the business climate index is favorable and increases, it is a very good indicator of the increase in production to come. Conversely, a bearish business climate index suggests a decline in industrial production. We note, since 2018, a drop in this index which returns to its average base 100. It is not the health crisis that will restore the morale of business leaders. We can therefore envisage an increased pessimism and consequently a markedly declining industrial production. The overproduction of companies will result in a drop in profits. In addition to the fall in market capitalization for large listed companies, this overproduction will be accompanied by a price war and, for some, bankruptcy. Here is the focal point of deflation, the contraction of the massive currency circulating in the economic circuit, the evaporation of the value of certain assets held on the stock exchange combined with the massive sale of stocks in a hurry generate a shortage of currency. This phenomenon is amplified with an increased hoarding, which freezes the circulation of currency in trade. Everyone wants to hold currency at the expense of any other asset to preserve their minimum reserves. Banks are more reluctant to grant loans to households and businesses to sell their products in overproduction. In relation to consumer demand, prices fall. On the other hand, as the currency supply decreases, the value of currency, on the contrary, increases. Finally, icing on the cake, the weight of the debt due to the monetary contraction becomes more important. Let's study the link between debt and inflation. Let us put ourselves in an initial situation before inflation, with an existing currency supply of 100 euros and a debt of 10 euros. The proportion of debt in relation to the existing currency is 10%. Let's study the situation after inflation with a currency supply that doubles, going from 100 to 200 euros, with a constant debt of 10 euros. The proportion of debt in relation to the currency supply is 10 out of 200, that is to say 5%. Conclusion: the debt burden decreases in the case of inflation. Let us return to our initial situation before deflation with a currency supply of 100 euros and a debt of 10 euros. Let us now look at the situation after deflation, and the passage of the currency supply from 100 euros to 50 euros still with a debt of 10 euros. The proportion of debt in relation to the existing currency is equal to 10 out of 50, that is to say 20%. Conclusion: the debt burden increases in the case of deflation.